And like, as you may or may not know, there are many analysts out there that are predicting that the U.S. markets will indeed pull back, that the U.S. markets are poised for a, shall we say, a reduction. And as a result of that, we must be cognizant of that particular fact. And we have powerful strategies and techniques that will get us P.A.I.D. irregardless of whether or not the market is up or down. But let us analyze why so many analysts are saying that the U.S. markets are poised for a pullback. It was just over a year ago. Just over a year ago that the U.S. stock market bottomed out following a pandemic-triggered economic shutdown. And from the trough, the major stock indexes marched steadily higher. In the 12 months following the bottom, the S&P 500, we're talking about the major position tied to the S&P 500, SPY, one of our Mag 7/15 position, has gained 77%. The Invesco QQQ ETF, another one of our Mag 7/15 positions, trading under the symbol QQQ, which tracks the NASDAQ 100 stock index, is up 86%. And many individual stocks whose share prices were plummeted during the early days of the pandemic have gained 100 and 200+%, and more up from their March 2020 lows. Yep, they're up triple digits. Now the question now is, what will the market do for the remainder of this year, 2021? Now, it seems unlikely that the broader U.S. markets can maintain the scorching upward pace of the last 12 months. Now, you can read many opinions, okay? And there are many forecasts out there as well. And they all are saying that the stock market may continue to climb, and then there are those who say that the market may be aligning itself for a correction. Now, the main arguments for a stock market correction are the following. First, stocks have climbed too far, too fast, and are due for a pullback. Next, stock valuations are at record levels, surpassing many of the same metrics before the 1999-2000 crash. And rising interest rates could draw interest and money out of stocks into safer investments that now pay some interesting interest income levels. The case for the stock market not to crash is as follows. The Federal Reserve will do everything and anything in its power to keep the markets propped up. And the Fed has a lot of power. They know that if the market starts to fall, the bad news will reverberate through the whole United States economy. And another case for the stock market not to crash by certain analysts is that the economy is awash in money. Money looking for an investment home. And for most individual investors, the stock market remains the only game in town. Well, yours truly believes that there are two forces that will counterbalance each other. And the stock market won't be able to move far in either direction for the rest of the year. Now, of course, I may be wrong. But as Mark Twain noted, quote, prediction is difficult, particularly when it involves the future, end quote. But what I can accurately predict is that income investments will continue to pay dividends, and pay dividends with yields that will be attractive for the rest of 2021. And those particular positions will continue to get you, me, we, the beloved Astor's Wealth Street family, P.A.I.D, as we utilize our powerful strategies and techniques to make Wall Street pay us right here on Main Street. Did we not get P.A.I.D yesterday handsomely? We appreciate all of your testimonials that you've sent in. We were running multiple strategies simultaneously yesterday as we made Wall Street pay us right here on Main Street. We're talking about our Mag 7/15 strategy. We're talking about our Beta Day strategies. And we're talking about our Astor's Wealth Street ER residual strategies to get us P.A.I.D. And the profits were immense, all courtesy of the ancestors and the Creator. So let not your heart be troubled. No matter what the market may or may not do, you, me, we, the beloved Astor's Wealth Street family, we have weapons in our arsenal that will continue to make Wall Street pay us right here on Main Street. Ain't no need to worry.
is cold.